For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
All right, welcome back, or welcome to the Saturday Sendout from the Simple Side. Glad to have you joining us again. Today, we're going to get into a bunch of news from this past week in the markets. We're also going to dive a bit into why Centene slipped 40% over this past week, and we're going to highlight how over 50 weeks our weekly trades have returned 67.75%. I'm excited to jump into it with you all. Let's talk about it.
Welcome to the Simple Side. Market beating picks inside. There's no jargon and no time to waste. Try the simple side and end up in first place.
All right, without any further ado, let's get into today's newsletter, which again, you can follow along with if you go over to thesimpleside.substack.com. And this newsletter should be the one highlighted on that front page. You can also subscribe there at thesimpleside.substack.com/subscribe and get access to all of these newsletters and the weekly picks that we send out every single week. I've discussed before, but as a reminder for those of you that may not remember or anybody who's new, I go a mile wide and an inch deep on my weekly updates. I just want to let everybody know everything that went on in the markets, and you can go and do more research into the topics that you care the most about. Q3 started off with a bit of turbulence, a few record highs, and a whole lot of EV headlines. We saw small and mid caps steal the spotlight, and mega caps took a bit of a breather, or if you want to keep with the EV theme, they took the backseat. Tech slipped, materials surged, and Tesla did just a bit of both. The S&P 500 kissed a new record midweek and ended just as high. Small cap and value stocks led. Tech, like I said, cooled off. Nvidia and Alphabet both lost a bit of altitude, but Apple and Tesla came in clutch. Tesla with a surprise China delivery rebound, and Apple with a Jefferies update, and also a Chinese rebound in their sales. We saw bond yields tick a bit higher. We saw gold get a spark. Oil bounced above 66, and Bitcoin is still over $100,000, but is under pressure. In our sector news, we saw a few winners and a couple of losers, with energy being the number one winner, up 1.7%, materials up 1.3%, and info tech up 1.3% early on. Then we saw some losers, healthcare being the largest one, thanks Centene. We'll get into that a bit more later. We saw comms down 1.2% and tech down 1.1% on day one. Small and mid-cap indexes outperformed their heavyweight siblings, which should come as no surprise because last week they were battered. I mentioned EV news earlier, and let's jump into that roller coaster and strap down because it has been a wild, wild ride. June China sales rose for the first time in 8 months. Congrats, Elon Musk, on that. But Denmark deliveries collapsed 62%. Okay. Shares whipsawed, if you will, down 5.8% on Tuesday and then up 4.97% on Wednesday, while Elon reportedly took over sales operations himself, which could have possibly been a move to just jump the share price back up as we saw it do, but Lord only knows what Elon has going on. In other EV news, we saw Xpeng, XPENG, up 224% year over year in June deliveries, with an Indonesia expansion and a big old global flex. Then we saw Zeekr, ZEEKR, up 113% over year-on-year deliveries and slipped month over month. Li Auto, LIAUTO, down 24% year over year. Forecast was trimmed here due to a system upgrade. And then we saw NIO, NIO, up 17.5% year over year in June. Q2 up 25.6% and is steadily quiet for the current moment. EVs aren't the only place with drama in the markets, however. We also saw a lot of drama with Renault, which took an 11.2 billion pound, not dollars, pound accounting hit over its Nissan stake. Non-cash, but definitely headline grabbing. Standard Chartered hit with a $2.7 billion lawsuit in Singapore over the 1MDB scandal, which is a good old case of bribery, money laundering, and corruption within the Malaysian Sovereign Wealth Fund. KKR went out and did what it does best, went shopping with £4.1 billion for Spectris, which is a Stockholm housing deal with Railway. I don't even know if that's the right way to say it, but that's what we're going for. PKG bought Greif's counterboard biz for $1.8 billion, boring name, but big box gains. ZS Scalar raised $1.5 billion in convertibles, no interest, literally. Bombardier inked a $1.7 billion jet deal with 70 plane options. The sky is the limit. Baidu, Boeing, and BASF reshuffled their executives, playing a bit of corporate musical chairs. Now we're going to jump into some headlines that you might have missed or you might find valuable. Alibaba launched a $7 billion subsidy war to fight PDD and JD in instant commerce. By the way, I think Burry has shorts on every single one of the companies that I just mentioned in that sentence, so you can probably see where that subsidy war is going. Lockheed Martin scored nearly $3 billion for Aegis missile defense upgrades, which should come as no surprise given all of the craziness in war that has been going on. Virent jumped 16% on Thomo Bravo buyout talks. Intel may ditch its 18A chip. 14A is the new hotness. Foxconn pulled staff from Indian iPhone plants. Apple's offshoring strategy might hit a snag, but the way that Apple performed last week seems like there's investor confidence behind the company. Google now owes $314 million in a data misuse case. Of course, the appeal is pending. U.S. Bancorp bumped its dividend and kept the $5 billion buyback machine running. Of course, tons of money fueling everything happening there. Next, in probably some of the biggest possible news that could happen, Figma filed for IPO under the ticker FIG. Make sure you pay attention to this one. As I'll mention later, this is going to be something that could make you a lot of money. Of course, in the short term, unless you plan on holding for a very long time. And last but not least, we've got Merck and Regeneron scoring FDA wins for 2 of their drugs. I'm not even going to try to pronounce the names. We also saw Kava get the KeyBank Chipotle 2.0 nod, and of course, shares popped on that news. Then we saw Coinbase acquired Liquify to boost its crypto infrastructure game. And that is all of the mile wide and inch deep news that I have for you. And now we get to talk about the fun stuff, at least for me, which is our weekly picks performance. As I mentioned earlier, we are now 50 weeks into this weekly newsletter and podcast going out. Again, you can find the newsletter at thesimpleside.substack.com. And over those 50 weeks, we have sent out 50 different sets of weekly picks, meaning stocks that we thought that over that week they were going to outperform the market. And we have done an incredible job, and I'm very happy with how this has come out. Over those 50 weeks, we have returned 67.75%, while the SPY over the same period of time has only returned 13.91%. We are noticeably higher and extremely glad to have that performance. Again, go look at the newsletter, thesimpleside.substack.com. You can see some graphics that we have there that show our returns. But if you're wondering or wanting me to just talk about a few of them, over the past week, we actually underperformed the SPY. We were below the SPY by 0.83%. Over the past 50 weeks, we have outperformed the SPY by 54.52%. And in annualized basis, we have outperformed the SPY by 56.7%. So extremely, extremely happy about that. Now we're going to talk about our interesting trade ideas. For the past couple of weeks, I've been following 2 stocks closely, UNH and Apple. For those of you that don't know, UNH is United Health Group. And then we've got Apple, which is, of course, Apple. The other interesting trade idea we've been sending out is IPO flipping, buying an IPO on the IPO date and then selling it just a few days or even the same day for a quick profit. This has proved to be very beneficial for myself and others who have been able to get into IPOs early. This week, major news came out that affected both UNH and Apple stock, just in very different ways. We'll start with the bad and end with the good. This week, we did see UNH stock run up to over $320 a share, just to get crushed and drop back down to $308 before the end of the week. And you're probably wondering why. Well, we can blame Centene, as I mentioned earlier, and Medicaid cuts. The quick and dirty explanation of what happened is Centene spent more money and made less. Surprise, surprise, that's why companies perform poorly. They insured patients for cheaper premiums, and those patients ended up being more sick than expected. In addition to this, Medicare cuts hit Centene very, very heavily, and they're going to take big losses, at least in the short term. For this reason, they had to pull their annual guidance, which resulted in a 40% drop in stock price. By the way, Medicaid programs account for over 57% of CNC's revenue. The drop in their stock price is absolutely warranted because these Medicaid cuts are going to directly affect their bottom line. This news negatively affected almost every other player in the space, like UNH or Oscar Health, ticker OSCR. However, UNH only derives 15% of its revenue from Medicaid, so the stock drop for UNH isn't exactly warranted in this situation. Maybe a bit, but not the full 5% or whatever it had from its highs this week. Like I said, there is some good news to come though, and that comes from Apple's side of things. Apple had a couple of interesting things happen this week, and it's been driving gains. As we talked about earlier, iPhone sales grew in China by around 8%. News that the AI-powered Siri is likely going to get assistance from an acquisition or a strategic partnership, and stock upgrades from analysts at major firms all helped to run the stock up. Now let's talk about those IPO flips I've been discussing. EMPG had an offer date on 7/2. The returns, if you were to buy that day, were 8.75%. Ticker symbol GRAN had an offer date on 7/1. Returns on that day, 4.91%. And then earlier, I think sometime last week, we saw JCAP, which offered shares on 6/26, and the returns for that stock are now 23.56%. Just showing how valuable buying these stocks right at IPO can be. And if you're selling now, you just beat the market in 2 weeks. Now, remember when I mentioned Figma earlier and their IPO? They're going to be one of these companies that's going to have an incredible IPO. It's almost guaranteed because the company is so popular in the tech world. I'll continue to be on the lookout for upcoming IPOs and companies to talk to you all about. Of course, I'll always be watching UNH and Apple, at least here in the short term, until we find another interesting trade idea that I can share with you all. Now, as an investing newsletter, I don't only cover weekly stock picks. I also have longer-term portfolios that play into my overall dumbbell approach to investing. I have 2 safe portfolios, the flagship fund and the Simple Side 50, and 2 other portfolios that go for growth, contrarian trades, and these weekly picks. So we keep growth on one side of the dumbbell, we keep safety on the other side of the dumbbell, and all of that helps us to have incredible returns that, of course, I share with everybody on the newsletter. My current average portfolio return is up 38.47% year to date. Our contrarian portfolio is up 66% year to date, followed closely by our weekly picks at 44% year to date, and our safe portfolios are currently lagging, but still doing very, very well year to date, above 0% returns, somewhat in line with the S&P 500 current returns. Now, paying subscribers, if you continue to read along in the newsletter, you can go and read about the picks that have returned us 44% year to date, 68% over the past 50 weeks, and you'll be able to get insight into why I'm making each of those picks in every category. Of course, these weekly picks include stocks from mergers and acquisitions news, top investment ideas from screens that I run every single week, and then we also share with you some micro cap and small cap finds that you can invest in. And last but not least, you can go and look at implied options price movement. So any stock that has an earnings sometime this week, there's some kind of implied volatility that that stock is going to have, and we give you access to all of that as well. So go and check all that out. Again, that's all for paying subscribers. If you're a paying subscriber, go and enjoy that luxury, and I will be seeing you all next weekend.